Max, have you played with the Chainlink Price Feed at all? Is it up? Have you checked it out?
Yeah, so we're really happy with it just because it does allow for us to finally get moving on some of the integrations we've been waiting on, right? Because Chainlink is the cornerstone for a lot of the yield aggregators in the space, the asset managers in the space, and just some DEX platforms in general. And so excited to see, like us having the ability to move forward with that now.
Yeah, me too. All right, welcome everyone to Chainlink Live. Hey everybody, welcome to Chainlink Live. My name is Andy Boyan from Chainlink Labs. I'm here with Max Fiege from BarnBridge. I'm excited to talk to you today, Max. Thank you for being here.
Thanks for having me.
Everyone in the chat, we can see your questions, so feel free to drop those in. I'm going to talk to Max about a few things, but we will absolutely get to your questions. So we want to keep this interactive. Let's get started. We've got a recent Chainlink price feed integration with BarnBridge. But first, what is BarnBridge? Give our viewers a chance to understand what makes it special and differentiates it in the space.
Sure. So BarnBridge is a tokenized risk protocol. And what that means in simple terms is that it kind of gets back to this idea of you can never get rid of risk or volatility. You just find someone to buy it off of you who has a different risk profile and is willing to take it on. So the suite of applications we're building out at BarnBridge essentially make it easy for users to identify a specific risk tolerance profile and move into positions that are actually tokenized, meaning they can get fixed rates in our smart yield platform, for instance, but then also be able to further transact these positions because they are tokenized, right? I think when you think about the TradFi precedent for a lot of these types of risk mitigation products, they're all bespoke. They're all contracts between a few parties. And what blockchain, DeFi on Ethereum enable is the ability to kind of actually codify these relationships and actually pool capital and create tradable markets for these more elaborate risk sharing, I guess is the best way to put it, products.
So for smaller funds, it's just not cost efficient for a smaller amount of money. It's not cost efficient to swap risk. But if we're talking in the millions and billions, all of a sudden it becomes efficient, which is why hedge funds and banks and the larger traditional players have done this for a long time. So by pooling resources and smart contracts, security, and permissionlessness, BarnBridge is able to do some of those things, but let anybody kind of ape into a pool and get a good risk tolerance. Does that sound accurate?
That's perfect. Yeah.
Cool. Well, let me find out a little bit about. Can I get an example of? So, how does depositing into BarnBridge? How is that different from doing like a money market, like Maker or Aave or Curve or something like that? Like, what's different about the application?
Sure. So with BarnBridge, what we're doing, especially with our smart yield application that's live today, is we aggregate user deposits into one big glob of cash, essentially, per different deposit market on one of these lending markets like Aave or Compound. But what we do is once that's been deployed into those money markets, the yield generated by it gets disproportionately allocated to either a senior side or a junior side. And so what that means is we are able to offer the senior side fixed rates, right? Which is not possible in just the vanilla kind of depositing into any of those money markets, right? It's always going to be variable. It's always going to be algorithmically determined based off of borrowing activity. But with BarnBridge, what you're able to do is you're able to lock in a position on the senior side. And on the junior side, what essentially you get with your position is actually a levered variable position, right? So to give an example of that, if we have $100 million on the senior side of any of these given money markets, they'll have a weighted average interest rate that they're entitled to. So let's say the 100 million is earning 7% on average. For any period of time where the underlying rate is above that 7%, that $100 million is now throwing off excess yield, and that all goes to the junior side. And so, the junior side is entitled in that situation to the yield it's earning, as if you were in the actual pool yourself. But then you get this added kicker of the excess senior yield. And so what you've essentially created here is an incentive for users to subsidize less risky users, right? Because if you believe that interest rates are going up in these money markets, you're kind of behooved to enter the junior side and kind of speculate on that direction.
So like I'm a stablecoin ape. I'm all about 25% if I can get it, and I'm willing to take it if it drops to 2 and like goes variable. I don't need to track that. But my partner wants 7%. Like just give me 7%, give me steady, because then I can count on it and I'm okay there. So BarnBridge is basically a way to do both. Like I can go in and I can do either one for various tranches of money or whatever that happens to be.
Exactly. And while we're essentially, we're forced to play the hand we get, right? The rates that are occurring in the underlying market are what we're able to offer, or some function thereof. But with subsequent products like our Smart Alpha or Smart Exposure product, those pools will be our own, as opposed to relying on kind of like a base protocol or DeFi building block. Yeah.
Cool. So you guys recently had an announcement that you integrated with Aave stablecoin markets. And so how is this new? Like what does this integration in particular do? This is not the alpha. This is the smart yield. Is that right?
Correct.
Okay, cool.
So an interesting phenomenon you see in DeFi markets is that while different platforms may have support for the same stablecoins, their interest rate profiles are actually idiosyncratic. So I can give an example of that. In April, for instance, we had the ability for you to deposit only into Compound's USDC market. Compound was earning low to mid single digits of yield there, while simultaneously on the Aave side, that same USDC would have been netting you low teens, some given parts. And so by us expanding the lending markets we support with Smart Yield, we're able to offer users essentially their kind of pick of the litter, right? Certain lending markets have different risk profiles, have different borrowing profiles. And that allows users to kind of pick and choose where they feel most comfortable and what aligns best with their portfolio. And on the flip side, BarnBridge now becomes an interesting source of liquidity for these underlying markets, right? Because if you deposit through BarnBridge, you're not actually in a position to borrow against those sums. So if I'm a Compound, an Aave, or a Cream, I see those BarnBridge deposits as a net positive, right? Because I'm essentially getting liquidity that can be lent out, but I don't have to worry about users further borrowing against those deposits. So it'll be interesting to see whether Smart Yield at scale actually leads to a degree of normalization across these lending markets, just because liquidity can enter a bit more efficiently, and you get new user profiles, right, between our fixed and junior types.
Yeah, that's really interesting. I hadn't thought of, Compound and Aave in those terms, where they do want to secure liquidity, of course, because they have a lending side, and that's the protocol. That's how it works. The lending costs more than the borrow, or the borrow side costs more than the lend side pays out, but they need to make sure there's way more of the lend side, and so you guys provide one of these, essentially a huge liquidity pool where you're not going to borrow. Somebody could independently go on their own, but BarnBridge isn't themselves going to do that. But if somebody independently goes, they have to recollateralize on their own on the Aave side. It's not through their BarnBridge deposit.
Exactly. Yeah.
Cool. Is this all on your interface? Do you like go and select an Aave market on BarnBridge? Is that how the deposit works? And you approve the contracts and go through everything that way?
Exactly. Should I share my screen or?
Totally. We love it. We love it.
All right, let's see if I can figure this out.
There's a little share button. You click it, and then I'll make it happen.
Cool.
Don't drop your private keys on screen.
uh, okay, there we go. Oh shoot, it's one of those Apple things. I'd have to exit if I did it.
All right.
Yeah, but to get back to your original question, essentially, if you're a user who's checking out Smart Yield, just at app.barnbridge.com, what you see is your choice of what market you want to enter in. So currently we support Compound, Aave, and Cream. And once you select, you'll be able to see the different stable coins we support for each platform. And the view you're presented with are essentially what the junior side looks like and what the senior side looks like. And so you can play around with that and see, with the size of your principal, what type of fixed income gain you'd be able to lock in on the senior side, as well as what you'd be able to earn on the junior side between both the actual yield earned from the platform and for the incentives that we've provided to subsidize the junior side that's taking on the risk in the system.
Cool. Let me ask you about Polygon next. You guys have a Polygon integration. I love Polygon. The Chainlink community is excited about Polygon as well. What's the story there? You're moving a portion of the protocol there, or it is moved, and does it just work like through Aave markets on Polygon, or are there other vaults there as well?
So we're essentially bridging our DAO that exists on Ethereum mainnet to what will be a Polygon-based implementation of our Aave integration. Yeah. So what users will be able to do is that they'll be able to use BarnBridge on Polygon, interact with the Aave market there, and the fees that the protocol earns as a result get redirected back to the Ethereum-based DAO, while the user is free to remain on Polygon for as long as they'd like. And the reason we're excited for this, aside from the fact that Aave on Polygon is slowly getting to the size of Aave on mainnet, right? It's been kind of crazy to see that growth. But when you think about kind of like barriers to entry for our users, gas costs have been a serious one, right? Because sure, it might be cool to lock in 5 or 6% on stable coins, right? For folks that are getting 0.001 from their savings account. But if the gas costs associated with initiating that position eat up the majority of your interest, well, then you're not going to do it. And so what Polygon is going to provide our users is essentially this ability to engage with our Smart Yield product and then subsequent applications as well, in such a way where what you see is what you get, right? Like you don't have 20% of your yield eaten away by the gas cost if you're just depositing $1,000, for instance. And so I think that'll unlock kind of like new users we haven't seen to date, and maybe folks who are willing to engage in our senior side for periods of time that aren't a whole year out, right? If you can fix a rate for a week while it's good, maybe you do that, right? And so we're just excited to see what kind of new user behavior emerges as a result.
Yeah, I got on Polygon this weekend. Gas prices were in the 30s, and so I was like, okay, bridge some over and jump into Aave, and borrow some and jump over to Curve and just try it out. And it's like pennies. It's pretty cheap. It's good because that same problem it happens. I hear that from a lot of people. It's like, well, I don't want to throw in 20 grand. That's a significant amount of sum. So I want to start small, but you can't start small because it's not worth it. Whatever it happens to be, whatever people's financial basis. But Polygon absolutely changes that. So I'm really looking forward to some of these other tools coming up as well. I have a couple more questions for you, but we have some good ones right here. So I'm going to start with Ty. Well, actually, I'm going to come back to you, Ty. I did see your question and I am coming back, but Tony has a question that I want to tie into another question about what does the token do. So the Chainlink integration you guys recently did is for the bond USD price feed and the bond ETH price feed. Is the kind token a part of this as well that he's talking about? And what's sort of your tokenomics and situation there for governance and protocol and all that?
Sure. So at the moment, users who are deposited into our Smart Yield platform are essentially receiving the yield in cash, right? It's represented, the position itself is represented by a very long-winded token. So it'll be BB underscore, and then whatever market you've deposited into, if you're on the junior side. And then users can further earn kind of the bond token in kind as an incentive. And at the moment, the bond token is purely a governance token. I can kind of delve into that a little bit more if you'd like.
First, let's go back. So this BB long-winded thing, is that a
Yeah.
stable coin? Is that like a dollar-based stable coin?
So it's your claim on what's accruing in the system.
Oh, okay.
So essentially, you can come back at any point in time with your junior token and claim what your position has earned, essentially, or what your deposit has earned. On the senior side, we do this with NFTs, so it's a bit different. But because of the phrasing of this question, I thought it'd be good to focus on the junior side. And so all what you're earning there is totally in cash, essentially, right? You'd be able to withdraw into the stable coin you deposited with. And at the moment, we are incentivizing the compound USDC pool, and we are rolling out rewards for a few of the Aave and Cream pools in the coming days as the result of the governance vote we just held.
So I got this question as a follow-up. So is that BB, that's basically an LP token? It's not quite LP because it's not liquidity the same way. It's not a pair, but it's a placeholder sort of token.
Exactly. So like a single-sided LP token in that ball of money that's essentially earning yield for that BarnBridge originator. Yeah.
Awesome. Ty, I'm still coming back to you because, actually, here we go. Ty is interested in the long-term vision of BarnBridge, and we will get into this more later. But first, he's got a specific one about secondary markets for senior side holders. So senior side holders are these like fixed rate, longer term depositors, whatever that term is, may depend. But he's asking about the possibility of secondary markets for these.
Sure. So today it's a tough one, right? Because essentially what we have are NFTs that have three variable properties, right? However much your principal size was, what your gain is guaranteed to be, and the date of the maturity. And so if anyone here has ever, bought NFTs on OpenSea, right? It's just kind of it's a messy process. You can't just automatic market maker that away, right? And so we're thinking about this in two primary ways. I think the long-term vision is definitely introducing some degree of standardization that would allow for layer 2 NFT market making to occur. I think a good parallel there is standardized contract sizes in traditional finance, right? Like when you buy an option on Robinhood, you're buying 100 in a given go, or worth 100 shares, right? And similarly, I think we can kind of normalize some of our senior NFTs as well, where it's like maybe each represents a $10,000 principal size, right? And now people are just hunting for specific returns and specific maturities in the secondary market, right? So it's kind of taking lessons from the traditional financial system. I think that's kind of a longer term view. And then in the shorter term, I'm not going to comment on it too much, but I think we have kind of cracked an idea for how to kind of address some of the user concerns regarding senior tranches, primarily this lack of secondary market liquidity, and tangential to that, the lack of the user's ability to kind of lever up against it, right? There's no platform today where you could actually take an NFT, collateralize it at scale. I think there are one or two projects kind of working on this, and but at the moment we just recognize that we probably have to introduce something a bit more complicated. And I apologize for being coy about it, but it's hopefully something we'll be able to roll out in the next 6 to 8 weeks. Maybe we'll see how it goes. But essentially, we've heard from our users why they're not entering into the senior tranches, and it's not something that can't be solved. So we're excited about that. And I think it goes to show just how much is possible in DeFi, right? Because you have this ability to kind of bend and twist things in ways that actually still work, right? Because everything is constantly being audited in real time, essentially, by the underlying blockchain. So Sorry to
No
sorry to
problems.
Ty for not giving a super complete answer there, but
We don't hold anybody to deadlines here because we understand development schedules. So, those are rough estimates. And once the development team sees what you said, they're going to haul you
I
across
know
the coals anyway. Um,
exactly.
this ties in your answer though ties into my question. Something I've really noticed about BarnBridge. I've been following you guys for a little while, arm's length, so I know of you, just not the details. But your community is like it's extremely passionate. They're a dedicated community, and they like really believe in the project and the depths of what it can do. Can you talk about your community and their conviction a little bit? Like, what is it about BarnBridge that people are really drawn to, and who are these people who are coming in?
Sure. So I think I can share a bit about my background on this, as I'm a community member who joined the core team. And so what initially drew me to the project was two things in particular. One was that the team took a very pragmatic approach when they first started, in that I think some 20% of token supply total is earmarked for insiders. And then in addition to that, we don't have a incorporated entity in any jurisdiction. So what that means is that from my view as a community member initially, I really liked the idea. I really liked kind of like the background of the people building in the early days. But it was really this element of kind of ecosystem, or a way to buy into the community in a way that I felt was more equitable than any project I'd seen to date. Just because if you think about governance tokens in general, right, it is a spectrum. You have
Mhm.
governance tokens that are associated with projects who have equity structures somewhere else, right? And the fact that the bond token is the end all be all for anything we do with BarnBridge definitely was compelling to me. And I think it's compelling for a lot of individuals who recognize that they can actually have a say in what we're building, in a true say. And our governance processes really do depend on community engagement. And so for the some 6,800 to 7,000 holders we've kind of gained over the past, what is it, 9 months now,
Mhm.
or a bit longer. Um, I think it just comes back to how we've really focused on putting the community voice first, even if it means that there's friction introduced, which is the reality for anyone building in public, right? Like most startups in the non-crypto world, keep things hush hush and work in stealth. And people building in DeFi today cannot afford that luxury, right? It's so I'm really happy with what we've built in the BarnBridge community as a result, because I think we have the norms in place and the expectations in place. The community does matter, and the community does truly come first. Now you do have to balance that with building open source products, right? Like there's a difference between building and maintaining in public, in my opinion. And
Mhm.
so that's something we've had to like really figure out. And what do we keep mum, and then how do we really work with community members once products are live to optimize and update and evolve what we originally built.
Mhm.
So yeah, I think what we've kind of accomplished with the community is really impressive, and it's those types of communities that really bolster projects, in my opinion. It just
Mhm.
adds a soul that cannot be forked, right?
Yeah, a couple of things. Private companies have those friction elements too. You just don't see them,
Yeah,
but
right.
they're not in public for everyone to see. So it's just a slightly different dynamic. Uh, you guys launched in the summer, like right in the middle of all the food tokens. I feel like it was yams were going crazy, and I don't remember what else. Urine had dropped a few months before,
Mhm.
and so it came across, at least to me, the branding and the thoughtfulness came across like we're gonna build real financial products in this way, and you guys have, I think, done a nice job of that. The community that supported you seems to agree as well, and they're the conversations that I see in your Discord, I pop in once in a while, are very impressive. So, yeah, congratulations on building a community and being part of a great project. Um, let's get close to wrapping this up. We got a few good questions.
Sure.
Grant wants to know why you're so handsome.
Uh, that's been
Happens.
one of the funniest things about starting to build in crypto is just the amount of like anonymous or pseudonymous folks that,
Yeah.
yeah, give you compliments. It's nice.
We also the people are looking for BarnBridge merch. I don't know if you guys have if you have stuff.
Yes.
Oh, he's got
So
one.
yeah, this is the Bond Classic Collection. If anyone's interested, you can check that out at barnbridge.shop. It's not run by us, the core team, or the DAO. It's totally community run by one of our more entrepreneurial members. And yeah, it's very comfy.
That is awesome. I'm repping NFT NYC, which is a conference that I think was
There you
just
go.
going on. I didn't go this year, but last year. Um, I want to wrap things up here. If you guys have more questions, please drop them in here, and we'll at least be able to track them and max and check them later. You guys can also ask in the communities. Let's wrap up with this one. It's a roadmap question. My question is, what's coming up? Ty poses it very well. What upcoming projects are you most excited about, and what is the long tail vision for the roadmap for BarnBridge?
Sure. So I'm excited about our Smart Alpha application that's launching. I won't piss off our devs anymore, but it'll come out at some point. And essentially, what Smart Alpha will allow you to do is make kind of structured product positions on underlying ERC20s. So kind of like how in the smart yield system, the juniors are essentially subsidizing fixed income for the seniors.
Mhm.
In Smart Alpha, the juniors will be subsidizing buffers for the seniors. So, what that means is like maybe you get downside protection for an asset or a little bit of downside protection and a little bit of upside, but as a senior, you give up excess upside. Kind
Mhm.
of the same principle as we have in Smart Yield. Um, and I think when you think about the emergence of DAOs in particular, these types of products become very powerful for treasury management, right? Because now projects can say accumulate ETH or accumulate WBTC with a bit less exposure to the underlying volatility, such that they don't necessarily have to kind of move all into stable coins out of fear for another bear market, right? It kind of gives them a little bit of leeway to still own the underlying asset of the economy that they exist in, right? Because
Mhm.
that's what essentially Ethereum has become today. Um, and then to Ty's second question there, I think it comes down to BarnBridge trying to be the go-to investment banking entity of DeFi in the future, right? As layer two solutions really gain speed and we see more proprietary trading, prop trading, right, kind of emerge similar to how you saw it in high frequency trading in the traditional world. I think there's a huge market for these types of structured products and just derivative products that will explode because it just couldn't explode on mainnet today. And so I see BarnBridge playing a pretty strong role in that future as we kind of build out this mode of both liquidity, of partnerships with teams like Chainlink, right? And are able to offer kind of that best in class origination for those types of products.
When I think about as markets mature, as treasuries mature, like if I'm an entrepreneur, I've got buckets of money that I need to do something with, and one has to
Mhm.
be real stable. I got to pay my employees, my team, or else I don't
Right.
have a team anymore. And so, like, you got to be safe with that. Whereas otherwise, like, I still have a treasury. Maybe I want to invest that, and maybe I want to grow into a new division. Whatever that happens to be. So this makes a lot of sense to me using those tranches and those different models. Max, I really appreciate you coming on and talking about the roadmap, talking about your products. Exciting project. BarnBridge, you brought your great community as well. I agree with Alec here. Total fire. Where can
Awesome.
the community, and we got a lot of people coming on. Thanks everyone for coming. Where can the community follow you? Where's the home base for BarnBridge?
So our website is just app.barnbridge.com. And let me make sure I give the right Twitter handle because I don't want to give the wrong one. Yeah, so we're barn_bridge on Twitter. So from there, you'll be able to find all of the updates that we're pushing, as well as what's most important, the links to our GitHub, as well as our Discord server, which is where most of the action takes place in the community.
Excellent. And we'll make sure and include all their links to their social properties down in the description below. Thank you, everyone, for attending a series of fantastic questions for a fantastic guest here on Chainlink Live. Thanks to my man Mark in the chat, who's hanging out and providing links and talking to people where needed. Max, it has been an absolute pleasure. It's nice to meet you, man.
Nice to meet you too, Andy, and thanks for having me on.
Anytime. Everyone, this has been Chainlink Live. Like and subscribe. Come back next week. We'll have more Q&As with really interesting teams. Again, my name is Andy Boyan from Chainlink Labs. This has been Chainlink Live, and thanks for being with us.